All right, it is time to get started. So good morning or good afternoon to everyone, depending on where you're logging in from today. I want to welcome all of you and thank you for joining us. At this time, Time Value Software is pleased to present today's webinar titled Mastering Interest and Penalty Calculations with TaxInterest Software. My name is Zach Cassie and my colleague today is Marty Bellerin. Okay, so what is tax interest? The basic functions of tax interest are to figure penalties and interest on delinquent returns or calculate interest on overpayments of income taxes. And as we work with the software, we'll see that it is useful in different ways for different situations. We'll also see that the software can be used to predetermine penalty and interest amounts prior to receiving a notice for non or late filers or for amended returns. We'll also see that it is useful for verifying the amounts on a notice that has already been issued. Now, when it comes to verifying figures on notices, we often hear practitioners say, I just trust the IRS numbers, or the IRS doesn't make mistakes. Well, in speaking with IRS personnel, we know that there are a lot of toggles and overrides in their system that can leave room for human error. So this just shows the importance of doing our due diligence in checking the numbers on notices of interest and penalties. Okay, and with that said, let's jump into the software and go through a quick example. So let's assume our client came to us and he did not file his individual federal income tax return for the 2019 tax year. After the return was finished, we determined that he owed $20,000 in tax and he hadn't yet made any payments. What is his total exposure? Okay, so let's figure that out. And to start, we have the federal table, and this is correct since we are doing an IRS interest calculation. And next we have the name field, and I'll go ahead and enter Jim James here. Next we have an optional ID field, tax ID field, and I'll make it easy and enter Marty's Social Security. And then we come down to our first event line, which is a tax. And next we have the date. And since this is a 2019 tax return, the due date for the tax would be April 15th, 2020. And next we have an amount field, and we said this would be $20,000. So this is the net tax due on the tax due date. So all the interest and penalties start from that point forward. Next we have a optional description field, and for this I'll go ahead and type in 2019 return. And let's include some penalties in our calculation. Up here on the toolbar, I can go ahead and select the penalty button. And here we will select the failure to file, select activate and OK. Let's select the failure to pay, select activate and OK. Close this. And we can see the two common penalties are live and they're now displayed here at the bottom of the screen. So with our tax and penalty information entered, let's go ahead and select the compute button here on the toolbar. And this gives us a summary of the tax, penalties, and interest. And let's assume we'll satisfy the taxes today. And I can go ahead and select recompute. And then let's click on the report button here. So this will show us all the details for the interest computations and penalty computations. This report can be a great tool to use if there is any discrepancy with the IRS. So there's multiple components to the report, and we'll cover those in detail coming up in a bit. Okay, next let's cover some more components of tax interest, and we'll go through the event names here. So the first one we have is a tax, and this represents a debit to the taxpayer's account, and it's usually used to calculate underpay interest. Next we have a payment, and this event is to show a payment made by the taxpayer. So it represents a credit to the taxpayer's account. And if the taxpayer is in a refund status where the amount of payments exceeds the amount of tax, penalties, and interest, then tax interest will automatically calculate overpay interest for a refund calculation. Next, let's cover entered penalty. And this can be used for calculating interest on penalties assessed by state agencies or other jurisdictions. Although tax interest does not calculate actual penalty amounts for non-federal jurisdictions such as states, you can use the entered penalty event to manually enter a penalty amount that would then be subject to interest at the underpayment rate from the date that you enter. And some less common events, deposit as a bond. And this event stops the accrual of interest on a corresponding amount of tax, much like a payment event. It may subsequently be used to pay the disputed liability. Now, the amount of a deposit in excess of any tax amount will not accrue interest and tax interest. Now, under the current code, however, there are circumstances that enable the cash bond to become interest-bearing if it is attributable to a disputed amount. Next, we have suspend interest, and this event stops the running of interest on all interest computations until you enter the resume interest event. So interest can be suspended for a number of reasons by the IRS. Next, we have resume interest, and this simply restarts suspended interest. And next, we have debit and credit, and these are a new feature in the third quarter release of tax interest this year. These handle debit and credit transfers from year to year, and you can use the description field to add additional comments for your report. Next, we have an IRS check, and this reflects a cash flow from the IRS to the taxpayer. If the amount of the IRS check exceeds the amount due to the taxpayer, then the IRS check event is treated like a tax amount, and underpay interest is computed on the excess. And lastly, we have motivated tax, and this is an old tax event that applies to some pre-1990 underpayments that resulted from substantial tax-motivated deficiencies. The interest rate is increased 120% for these amounts. And if we move along the event line here, we have the date of the event, and this is a due date of tax or when a payment was made. Next, we have amount, and for a tax event, we want the net tax due, so less any estimated payments made or withholdings. Next, we have a description field, and this is an optional field that will replace the tax word on the reports that you generate. All right, now I'm going to turn over the controls to Marty.
All right, thank you, Zach. So we're going to dive a little bit deeper now. We're going to go through the features and capabilities of tax interest and walk you through it and give you an explanation for numerous items. So let's go ahead and hit new. We're going to talk about penalties. We go 315.20 for 200K. And I'll put a payment in here. 070120 for 50,000. And let's click on the penalties icon. The penalty tax interest handles 9 different federal IRS penalty calculations, and they can all be activated by a couple clicks of the mouse. And let's walk you through pretty quick. So first of all, there is interest on federal penalties, and it's computed using the same rate as the tax deficiency rate. Interest on the failure to file penalty and the accuracy-related penalties runs from the return due date or the extension date, whichever is later. For the other penalties, such as the failure to pay and the estimated tax penalty, the interest does not start until the IRS assesses it with a notice and with a couple inputs. We'll show you how to handle those interest calculations. So let's go through these one by one. So the failure to file. Failure to file is a 5% per month or a fraction of a month until the return is filed to a maximum of 25%. But everything the IRS says, there are exceptions. When the failure to file and the failure to pay run simultaneously, the taxpayer is only responsible for a 5% penalty. So the failure to file becomes 4.5% for 5 months and maxes out at 22.5%. In tax interest, we call this the offset, and I'll show you that in the reports of how it shows up. So this is a classic story, and it does happen once in a while. I had a call from a CPA who advised his client to pay his roughly $40,000 tax on 4/20, so it was only a few days late. And since the tax was paid, he didn't file an extension, and he didn't file the return until the extension due date on 10/15. His failure to pay penalty was 0.5% for 1 month, not too bad. And his failure to file penalty was almost $10,000 or 24.5%, because a failure to file penalty goes back to the amount of tax on the tax due date and counts the months until the return is filed. This gentleman argued with me a little bit, and I told him, hey, it's not my rules, the IRS, and he agreed and definitely said this was a lesson learned. So even if you pay, if you don't file, you can be subject to that amount, subject to the amount on the tax due date. So this is very easy to do. Date return was received by the IRS. That's when the clock stops. If you get a notice, sometimes you'll see 2 dates. It's usually the most current date for you. Due date with extension. So if you have an extension of 6 months, you'd put it here. Net tax due. I haven't seen any situations with $200,000 is not the amount tax due. We do have other situations. Was a failure due to fraud? Check that, it'll activate that, and then use minimum penalty. I'd recommend keeping that. So we do have show tips. You can uncheck this if you don't want to see it, but I recommend keeping it open. But basically, it gives you a little quick summary of the penalty calculation, and in this situation, what the minimums were each year going back to 2009. So that is the failure to file. There's 2 failure to pays. One is a failure to pay tax shown in return. The other is a failure to pay amount assessed. Let's talk about the amount shown in return. So we activate that. So the failure to pay is 0.5% per month or fraction of a month until the tax is paid, and this does max out at 25%. The rate can increase to 1% after a net notice of levy or jeopardy, which still maxes out at 1%. Just gets there quicker. The failure to pay becomes interest bearing when it's assessed. So these 6 boxes, you get a notice, these are the assessment dates. What happens is, let's go ahead and put some dates here. And let's say 06, 21. So this, when we put a date here, that's going to trigger the interest calculation. So tax interest will calculate the penalty up to that point in time, and I'll show you in the reports, and then it's going to start charging interest. The grace period is important to check. So if it's $100,000 or more, it's 10 days. Otherwise, you get 21 days. So that will affect the interest calculation. So be sensitive to that. Let's say on 6/1, we got the notice and it was a jeopardy notice. It said, oops, now we're going to go to 0.5% to 1%. We also offer the installment agreement. If you do file on time and you negotiate with the IRS, you can get your penalty reduced from 0.5% to 0.25%. There's a start date, and if you do renege and don't make your payments, they'll pull it, so you can have a stop date there. So pretty straight to do. These 6 boxes are the key to the failure to pay calculation, because this triggers the interest. Go ahead. Okay. Next, let's talk about the failure to pay assess. So this penalty applies to amounts not shown on the return, but are subsequently assessed by the IRS. These are generally for audits. So we'll go to audit, and we activate it here. Let's say the audit amount was $60,000. Put 60. And the difference in this penalty is the notice date here. So this interest on this and the calculation on this is going to start from this date here. So let's put 07/15/20 and we'll let that go. So we're going to change this to 60, hit OK. Now the total tax was 200,000, which means that the failure to pay tax shown on return is going to be 140,000. So those two numbers have to equal the total amount. Hit OK. Let's close this and let's go to our report here. See, this is our nice little summary, and when we go to the report, here we have a lot of detail. So here is the interest on the detail. That's the interest on the tax portion. So here's the 200,000 and our subsequent payment of 50,000. This is the interest rate by quarter. This is the interest accumulated. IRS does daily compounding, so the interest is added every single day and then gets added to the balance, and then interest on the next day is higher. But this is the quarterly amount here. We also have the interest on the penalty. This always amazes me. We're timed by a money calculation house, and this is the failure to file penalty. The failure to file penalty takes 5 months to accrue. The IRS is nice enough to go ahead and charge the entire amount on the tax due date and start charging interest. This was our failure to pay penalty. This was the amount of penalty at that point in time when we got assessed. That gets added to the balance. That was our second assessment when it went to levy. You see, you get a tremendous amount of detail. If you have an IRS notice, this summary here is very beneficial to use. This breaks everything down into buckets, and I'll show you an Excel worksheet where you can actually use that to analyze the buckets. And let's see, now we have the failure to file penalty. So the failure to file penalty, we had 55 months late based upon our schedule, but it does max out at 5 months at 5%, which would be 50,000 based upon the tax due on the tax due date. And then here is our offset when the failure to file and the failure to pay run simultaneously. We get a 0.5% per month for 5 months. And that's our offset, and then here's the minimum amount. So more detail than you need. So the failure to pay tax shown on return. So this is a 0.5% per month, and it maxes out at 25%. But it maxes out differently because it maxes out on a percentage times the number of months. So here we had 4 months at 0.5%, so that would be 2% of the 25%. And then we had a payment down, so now it's at 90,000, so it's at that amount. And then we had our levy notice here, it goes to 1%, so we had 17 months at that. And this is our final amount here to get to 25%. So you see we're not 25% of that, we're 25% of the incremental pieces. We also have the failure to pay amount shown on return. And it's going to give us a little logic here that our amount assessed is 60,000, our total tax is 200, amount subject to the tax shown on return is 140. There's our 60, and then there's our 0.5% per month for 15 months. Lots of detail. Also, if you ever get audited or have a transcript or anything, make sure you send those schedules because they're very helpful. IRS is very familiar with them. Next, let's talk about the accuracy-related penalties. They are over $5,000 and they're interest-bearing from the tax due date or extension date, whichever is later. They're very simple to do. Let's go through them pretty quick. So here's a negligence. A negligence is a 20% penalty. If you have an extension date, you put that in here. The negligence is probably a lot less than the 200,000, so you put the appropriate amount there. Once again, you can see the tips. I'll have that 20% in there. Next is the substantial underpayment. This is the 6662D, so you activate that, put the appropriate date, appropriate amount, you're good to go. Next is the valuation misstatement. It's a little bit different. Valuation misstatement is a 20-40% penalty. You toggle it here. 40% kicks in when it's over 400%. If you negotiate something with the IRS, you can change this to say 30. We'll do the calculation for you. Once again, put the appropriate amounts and dates. Next is the overstatement of pension liabilities. This is also a 20-40% penalty. 40% kicks in when it's over 400%. And valuation understatement of gift and tax. This is also a 20-40% penalty. Same calculation effectively. And finally, the bad boy of them all, fraud. Fraud is a 75% penalty. Activate that, and the IRS is still nice enough to give you an extension date if that's applicable. So those are our penalty calculations. As Zach mentioned, we don't do state penalties, but we'll show you an exercise how to build them into your schedule. Okay, let's look at the hot interest. Let's open up a new schedule here. Say 0, 3, 15, 20, 200,000. So the hot interest is for large underpayments. They can be subject to a 2% surcharge when the taxes are paid. The higher interest rate is charged on C corporations underpayment when the tax is also in excess of $100,000. The 2% surcharge starts when the company is notified and they don't pay. So all we have to do is go up to the hot interest rate, activate it. You have two options. You can do the 30-day letter date, or you can do the applicable date. Do that. So 02/01/21. If you do make your payments, you can actually stop the hot interest rate. You have that option there. Hit OK, and we can go to our reports now. And you'll see that the interest rate was 3%. We activated the hot interest rate here. It jumps to 5%, so it's going to have a 2 percentage points increase until it's stopped or paid off. Let's look at the C Corp refund. New schedule. Whenever you have a refund situation, you either want to start with a payment or a credit, and it activates the refund calculation. And let's go ahead and put 0, 3, 15, 20, 200,000 again. And let's put an IRS check in. IRS check means that the IRS refunded you money and it was a mistake. They're going to want it back. They're going to charge you interest until you give it back. Let's say 08/01/20, $5,000. The refund rate for C corporations is computed at 1% less than the normal rate, and the GATT refund of amounts over $10,000 is reduced another 1.5% or 2.5% overall. So all we have to do is activate the C Corp. Let's treat taxpayer as a C Corp, 1% discount. And here is our $10,000 threshold. Once again, if you do negotiate something with the IRS and it gets raised, you can change that. And here is our IRS check. And now we go to compute. Ask us again, which is good. And here is our credit, 200,000, a refund interest of 26, and our IRS check, which effectively is a debit to the account of 5,000. And we go to report. We see that tax interest is going to break this refund in two buckets. So we're going to have $200,000. We're going to break it into the high rate, which is 1% less. So the interest rate would have been 5%. Now it's 4%. And it's going to calculate the interest on the $10,000 amount. And once again, this is daily compounding, but it's going to add it on a quarter-by-quarter basis. And then here is the GATT rate, which would be another 1.5% less. So this would be down to 2.5%. And this would be 190. So they're going to accrue in their own buckets. Here's our IRS check. The IRS always takes it out of the high bucket. So here we had $10,000 to $5,000 IRS check. Now we have a bucket of $5,000. So we covered the penalties, the hot interest, C Corp refund, and we showed you how to use compute. And I'm turning it back over to Zach, and he'll take us to our next slide.
All right, thanks, Marty. All right, let's get back to the software and start a new example. So let's say we have a tax on April 15th of 2020 for $20,000. And we have a payment on September 15th of 2020 for $10,000. Now, if you have a unique situation that warrants it, you can reallocate how a payment is applied to tax, penalties, or interest. So from a payment amount field, I can press F2 on my keyboard, and you can see here you can allocate a payment by a specific dollar amount or by alphabetical priority. And the payment allocation defaults are located here under the Options tab, and I can select Default Payment Allocation. And this table will show you all the defaults that TaxInterest uses to allocate payments. And these are set up as IRS defaults, but they can be modified and restored. So this is not too common, but just know it's there if you need it. Next, also under options, we have the Enter key acts as tab key. And this is just how you move through the program. So we often use the tab key to move from field to field, but you can use Enter as well. Also, we have whole dollar mode, and this gives you a couple extra decimal places to work with. So this comes in handy when working with larger dollar amounts. Next, let's cover the Tables button here on the toolbar. So here you can view the interest rate tables for both federal and individual states, as well as Canada and their provinces. So for example, let's go ahead and select the Alabama table and select Open. So this is going to load the rates for Alabama. And if we wanted to see the contents of that, we could go to Options, Edit Interest Rate Table. And this is going to give you the interest rates for Alabama dating all the way back to 1982. So here we have a starting date and new rate every quarter. And Alabama uses the simple interest computation mode. And here is the normal rate, and this represents the rate for calculating underpayment interest. Next, we have the motivated rate, and this is not really applicable for a state table. Next, we have a refund rate, and this represents the rate for calculating overpayment or refund interest. And you also have the ability to create a new table if you need to do a jurisdiction that is not in tax interest, such as sales or excise tax. So you'd simply fill this out, select Save, and then that new table would be available here under the Tables button. All right, next let's cover the Reports button here. If I click on this, you can see the options that are available to us. Let's go ahead and select all of these and select Start. So here we have the interest and penalty detail report. We have the interest computation detail report. And you can see the rate and the factor there. Here we have the payment allocation detail report. Here is a monthly accrual report and an interest rate table listing. And you, of course, have the ability to go to File and print these reports as needed. So with that said, I'm going to turn the controls back over to Marty.
Next, I want to show you a couple new features that we put in last quarter. May or may not know about it. So we do have a new payoff calculator. And the payoff calculator gives you two options to do a payoff. And I'll show you that in a second. And we also have the ability to import and export CSV files. I'll show you that too. Let's go ahead and make this 100,000. So you can go to Compute now, and you have a payoff calculator, and you can start at any point in time. So let's say I want to start October 1st. You have two options. You can do the fixed term, so you can determine what term it is. So you can say, I want to pay this off in the next 12 months. And if you're using it in the future, it's going to use the last interest rate available. So this is only a projection. If the interest rates go down, then obviously you're going to pay it off quicker. And go ahead and hit 12. And now you can go calculate. And what it's going to do, it's going to build your schedule for you. So if you do have prior information on here, I would save it before you do it, because we don't have an undo button. And it builds a schedule, and it also is going to give you a summary here. So the payoff will require 11 payments of $10,956.80, then one final payment to make your 12 payments. And then you go to your report, and it's going to give you all your detail here for doing your projection. We can also have another option. So, say, we can go to compute and payoff calculator and put a fixed amount. So let's say your client can say, well, can't pay it off now, but what if I pay $4,000 a month? And I can start at, say, 11/01/24 and calculate. What it's going to do, it's going to populate it $4,000 a month. It says it's going to take 35 payments, $4,000. Obviously, you have to work with the IRS on that. But this gives you a basis of what needs to be done to get paid off, assuming that the interest rates stay stable. The other item we had was importing and exporting. That's under options here. And there you can do export and import. If you need any help, if you go to the help menu, go to import export, there'll be a very detailed explanation here. See that, but it gives you what the CSV field need to be to import, and obviously export is pretty straightforward. I'm not getting able to see that, but that's where it is. Okay, so that's kind of my finish for the day, and I'm going to turn it back over to Zach, and we'll wrap up our presentation.
Thank you, Marty. Just a few more slides. So as we mentioned at the start of the webinar today, we have attendees from tax and legal practices and corporations. So the advantages TaxInterest gives you depends on your specific situation. And since TaxInterest uses the IRS basis for calculations, assuming you're dealing with the same set of facts, you can determine what the IRS numbers should be. So for those in practice, you can use TaxInterest to calculate the entire amount your client will owe for a late filing or payment situation or with amended return. So using TaxInterest to determine the total amount due, you will separate yourself from others who may just have their client pay the tax and wait for a notice to arrive. So you can potentially provide better service by being a bit more proactive. And if you are in corporate America and are computing interest on penalty accruals for UTPs for FIN 48, you will have confidence that your figures are audible. We have a large number of Fortune 500 companies who use TaxInterest for calculating interest and penalties. And last but not least, be sure to use TaxInterest for checking the numbers on a notice. Those numbers can amount to significant dollars. So that will conclude our presentation today. And Marty and myself, thank you for attending today and have a great rest of your week.